DocuSign beat fourth quarter earnings expectations, posting adjusted earnings of 86 cents per share, also revenue of $776 million. And that did beat the street's expectations. You can see right now that the stock is up by 10.2%. Joining us right now is Allan Thygesen. He is DocuSign CEO. And Allan, the numbers were better than the street had anticipated. Your guidance for the full year was about in line with street's expectations, maybe slightly below just in terms of the revenue that you're looking for. But obviously, investors like what they see today. Why don't you describe the quarter and what you're seeing right now this year?
Yeah, it was really a fantastic quarter for DocuSign. We beat our guidance on the top and the bottom line. And that was reflective, I think, of multiple things that have been a theme throughout this transformative year for us. We really stabilized and I think start to turn the corner on the core business. We've become much more efficient, so printing significantly higher operating income. And then we've launched this new platform for intelligent agreement management. It's been very well received by customers. We're able to talk about some of the early results and give a look ahead to an acceleration in billings, which I think was well received by investors.
Yeah, the new launch was DocuSign IAM, which is your smart offerings that you're coming out with for your platform that helps organizations create and do things. How does it work? Yeah,
so agreements go through a journey, right? You draft them and edit them. You may negotiate them with another party, then you execute them. Many people do that with DocuSign today. And then you can manage the agreement once executed. And to give a very concrete example, what a lot of organizations are doing with our platform is they take all of their completed agreements and we can extract all the essential data out of those agreements. Those are dumb flat files today. It might as well be in a file folder. And we can tell you what's in your agreements, when are they up for renewal, which terms might you want to renegotiate, or even benchmark them against other deals or what has actually happened under the agreement. That's tremendously valuable. It's opening a treasure trove of data that companies haven't historically had access to, and we're seeing an excellent pickup on that.
Yeah, you had a study that you commissioned last year that estimated companies lose somewhere around $2 trillion on unintegrated agreements, meaning they lose track of things and they don't follow up when they should be.
Yes, and as well as on the inefficiencies of the agreement process. I'm sure we've all experienced that it just takes so much longer to come to agreement, even after the parties have agreed in principle. And that's both internal to companies and in exchange with outside parties. And so we can provide tools that help ease that and make that process much faster, more predictable, and of course using AI at different stages in the process to assist. And that's also a huge driver of inefficiency and an opportunity to provide value.
Microsoft and Google, though, both offer electronic contacts. They've got a lot of partners, a lot of users. How do you fight off the competition there?
You know, Microsoft and Google are two of our largest partners. They've integrated DocuSign deeply into their Office suites, respectively. And they're not looking to become agreement management specialists. So those are very strong partnerships. And we see that even with the big application software providers, whether it's Salesforce or an SAP or a Workday or ServiceNow. We work with all of them. And this is a specialized area where they're very happy to partner closely with us.
We have talked an awful lot about uncertainty, consumer uncertainty, in recent weeks, also business uncertainty. Has any of that shown up in the number of either businesses or consumers that are using DocuSign, the number of deals that are being made on any level?
No, we're not seeing that yet. I mean, we do have an incredibly diversified customer base across all industries, companies of all sizes, and of course, geographically. And so we don't tend to see individual sector or country gyrations quite as much. But even as aggregate trackers of activity, things like what's the number of transactions that get processed through DocuSign, February was pretty much as we had expected and modeled. And so I don't see anything yet in transactional activity that shows one way or the other in terms of where we're heading.
I mean, you have such a large footprint. I would think it would take something that really huge to rock your numbers. When's the last time you actually saw something like that? Is there a point in history
well, I
that happened?
think COVID.
Like COVID?
COVID was a bit of a roller coaster for us.
Although I remember people using you even more because nobody wanted to sign anything in person during COVID.
Yes, that is true. So it was a spike in demand, and then when some of those use cases went away for things like the government loan programs and so on, that then decelerated. Then people had overbought some, and so there was a correction for that. But now I think we're well past that. We're in a steady state, and you would expect more and more people are going to want to sign things electronically, and more people are going to want to access AI to improve how they manage agreements. And so I think we are very well poised to benefit from that.
What kind of growth do you see in DocuSign IAM? What kind of sign up? What kind of pickup? Have you released any of those numbers?
Well, so we saw high single digit of all direct deals were IAM in Q4. Over 20% of all new deals were IAM in Q4, and we're projecting that it'll be low double digit of our total book of business by Q4 of this fiscal year. So it's very meaningful for us.